On Business Incorporated today. Egypt's non-oil exports up 22% within 7 months. Mobile money in Kenya hit 970 billion Kenyan shillings in the first quarter of 2021. South Africa receives COVID-19 financial boost. Hello and welcome to the program. I'm Ini John Mekwa. Let's start with intraday market numbers now. We kick off the show with numbers from Africa, where major indexes we track were in the green following the pullback in global shares last week. Nigeria's main index was up marginally, 0.02%, while South Africa's JSE index climbed higher by 1.26% at intraday. Similarly, Egypt's benchmark index jumped by almost 2%, while Kenya closed Friday's trading session positive at 1.01%. It's a similar picture in the Middle East. The Abu Dhabi index rose higher, 0.06%, while Dubai's main index edged up 0.72%. Elsewhere in the region, Saudi Arabia and Qatar index were higher at 0.59% and 0.5% each. We move to Europe now, where shares are coming off their sharpest weekly decline since February, as traders monitored issues such as global monetary policy, the Delta COVID variant, and China's tech crackdown. Well, let's get more information with Chelsea. Chelsea is joining us from Frankfurt. Hello, Chelsea. Good afternoon.
Good afternoon.
So last week, European market posted their worst week in 6 months. How are the markets starting off this Monday?
Well, trading is starting off on a slightly more optimistic foot at the start of this week. We have the DAX here in Frankfurt up about 0.2%, so some marginal gains, but clearly the markets are starting to find their footing a bit after last week's dramatic declines, where investors started to become very worried once again about the spread of the Delta variant, the possibility that we will see more and more restrictions reimposed as we head into the fall, as well as the prospect of central banks starting to pull back on some of that monetary policy that's been supporting markets. For now, investors are taking that in a bit of stride, but clearly there's a lot of risks to markets right now, and I would expect we'll continue to see more and more volatility as we confront the risks of coronavirus in particular.
And a new report shows that German private sector activity was strong in August, despite issues in the manufacturing sector. What's driving the economy right now?
Well, we've really seen a bit of a shift in the European economy over the past couple of months. For the majority of the pandemic, we saw the manufacturing sector keeping the European economy afloat. So factory demand, exports were still quite strong, even when lockdowns were in place. Now we've seen that switch. So the manufacturing sector is struggling with the supply chain constraints. And so many companies are having to cut back production because they just can't get enough raw materials to make their goods. But on the other hand, the more positive side, the service sector, which was very weak throughout the pandemic, has started to recover now that economies have reopened. So that's really what has taken the driving role in the European economy. Things like bars, restaurants, travel have all started to really gain speed once again. So that is helping to mitigate the damage caused by these supply chain manufacturing problems. But as I said earlier, the coronavirus is still a major concern, and if we do see restrictions having to be reinstituted, that's going to hit first and foremost the services sector.
So we also hear there's transportation chaos in Germany today as train drivers walked off the job for their second strike in a month. What kind of disruptions was really the backstory to this?
So these train drivers have been negotiating with Deutsche Bahn, the state-owned rail company, mostly for higher wages. They want a 3.2% wage increase. They also want a 600 euro payment for their work throughout the coronavirus pandemic. Deutsche Bahn has said that they don't want to do that because they've lost a lot of money throughout the pandemic. So we've seen this turn into a bigger fight between this union and Deutsche Bahn. Today starts the strike, the second strike in a month. That's going to hit many commuters. About 5 to 6 million people use the Deutsche Bahn trains every day. So that's certainly going to wreak some havoc on people's transportation. The other bigger concern for the German economy is that Deutsche Bahn is also a big cargo provider. So they ship a lot of goods for companies. There's certainly a lot of concern that this could add to those supply chain constraints that companies are already struggling with, particularly for the chemicals industry or the auto industry, which is having to cut back production already because of a lack of chips. One economic institute here has estimated we could see this cost the economy 100 million euros a day if these strikes continue. So certainly something looming over the economy once again today.
Yeah, so we do hope that the problem is sorted out so the country doesn't have to lose that much. Thank you so much, Chelsea, and enjoy the rest of your day. We move to the UK now, where growth slowed to a 6-month low. The IHS Markit CIPS Flash Composite PMI fell to 53.3 from 59.2 in July, its third consecutive monthly decline and lowest reading since February. Well, we have Juliana back now to tell us the details. And of course, much more. Hello, Juliana. Good to speak with you again.
Nice to speak with you again, Innie.
Yeah, so the PMI numbers you talked about in the morning, they're not looking so encouraging. What drove this?
Yeah, not looking so encouraging. I think the headline is there's still growth, which is really important, growth that we haven't really seen since pre-pandemic levels, so kind of January, February 2020. But the only thing is, as you just pointed out, this is, again, the third consecutive month of a slowdown in the growth. 50 is that all-important threshold, so anything above 50 shows that a sector is expanding. And the composite, so this takes into place services, manufacturing and construction, has fallen to about 55. So this is a little bit worrying. This is for the month of July. And there are several things. Of course, the big business conversation over the past couple of months has been supply chain issues. This is a major concern, particularly in the automotive chip industry. There are some manufacturing plants in the UK that have had to shut down altogether because they just can't get the goods in. Also, as well, and we discussed this morning, labour shortages in the UK. There are currently 1 million vacancies available. There's nobody to fulfil these vacancies, which means you can't get the staff in. So that's a huge issue. And then, of course, COVID-19 hasn't gone anywhere, even though restrictions have been lifted. So what we are starting to see here in the UK is that consumers are becoming more cautious. They're cautious about where they're eating, where they're going out. They're not spending as much as they did. And we did obviously have a couple of big sporting events over the summer, Wimbledon being one of them, Euro 2020. People were spending at the beginning of the Olympics. People are not spending as much as they were there. So the big question is the GDP Q2 recovery going to be as sustainable in Q3? That is a massive, massive question. And of course, Britain needs that. It was one of the most badly affected comparative economies when it comes to the contraction of last year. It is hoping that the IMF, Bank of England are all right when they suggest that the GDP will expand by 7.7% this year. But we'll have to wait and see. We are getting our first indication on Friday of what Q3 is going to look like. But the PMI private sector data doesn't paint a very bright picture thus far.
Yeah, but we'll just wait till that Friday and see if something happens before then. So how are the markets reacting to this data so far?
Not bad. As you were discussing in Frankfurt with Chelsea there's some positive sentiment at the moment. There were gains this morning on the FTSE All-Share. They've held on to those gains at intraday despite the dismal PMI numbers. And there were gains on Friday, so they've extended those. The FTSE All-Share at intraday is up 0.37%. The FTSE 100 also up by 0.41%. And the FTSE 250, the domestic market, up by 0.18%. In the currencies market, the British pound is up against the US dollar by 0.30%, also up against the euro by 0.17%, and up against the Japanese yen by 0.56%.
Anna, just before you go, a little bit of corporate news now. NVIDIA Corp's $40 billion takeover of British chip designer ARM is hanging in the balance. What are you hearing about this?
Well, it's a major story, a story that's been running really for a couple of years, since after the Brexit vote. Japan's SoftBank bought ARM, which is a Cambridge-based chip designer. They create chips for most of the smartphones that we use. Biggest customers include Samsung, Huawei, Apple. It was sold then, and at the time, chips weren't really a big topic of conversation, and it was sold as, this is a great story for Britain, that, finally we are starting to see global Britain spreading its wings. And then, all of a sudden, Donald Trump and Xi Jinping got into a massive spat, and chips became very, very, very important. We can see this now with the global chip shortage that's going on at the moment. And then NVIDIA, which is an artificial intelligence graphic design chip maker, they wanted to buy ARM from Japan's SoftBank. They said yes. That raised eyebrows in the UK, particularly from Culture Secretary Oliver Dowden. They've asked the CMA, the Competition and Markets Authority, to investigate some concerns that have been made about intellectual property from the license holders, as well as, the future of ARM, because Japan pretty much kept it into the same situation it was in before it was sold. They've come back with their preliminary findings, and they believe there are concerns, which means this is now going to go into a phase 2 investigation to see whether or not this is going to affect competition. And I think really national security, that's what Britain are trying to get at. I think now they realise just how important global chips are. They are a vital component of everyday life. So we'll have to wait and see. NVIDIA is still confident that the deal, $40 billion deal, is going to go through. ARM not too happy, particularly one of their founding members, Herman Holden, who's been, speaking to whoever gives him a microphone, saying it shouldn't be sold. But we'll just have to wait and see.
We'll certainly wait and see. Well, thank you so much, Juliana, and enjoy the rest of your day. So let's move to Kenya now, just before we go on break. The amount of money Kenyans transferred via mobile money jumped by 296.97 billion shillings in a year, from 674 billion recorded in the first quarter of 2020 to 970.97 billion in the first quarter of this year. Well, what impacts does this have on the economy? How are they achieving that? How much spread have we seen when it comes to e-payment? We have Mercy Melanoy, business journalist with Mola Media in Nairobi, Kenya, to talk to us on that. Hello, Mercy. Good afternoon.
Well, good afternoon. As you rightly put it, of course, mobile money transactions have increased. And actually right now, according to the latest statistics from the Central Bank of Kenya, it has increased by about 56% to about 2.72 trillion Kenyan shillings that has been transacted as of now. Now, one of the things that mobile money in Kenya is at the backbone of our country. And we have, of course, Safaricom, which through the mobile money app called M-Pesa is what is really accelerating the mobile industry in Kenya. Now, if you look at some of the things that have accelerated the mobile money penetration and the huge transactions that are being transacted every single day is through mobile money agents. According to the Central Bank of Kenya, as at June, there are about more than 300,000 mobile agents that were registered in the country. Now, what this does is that all these agents are across to the most remote part of the country you can imagine. And of course, now you can send money to your grandmother, to your mother in the village through mobile money. And of course, through M-Pesa, this and the coverage that it has across the country, this has really accelerated the access to financial inclusion. Now you find that you can pay through mobile money for your tomatoes, for your onions, for the restaurants. Right now, actually, one of the core things for you to have a business in Kenya, you need to have a mobile money transaction component. If you don't have that, then you'll be in much trouble. So, of course, a mobile money is at the center and at the core of this country. Now, one of the interesting thing is that last year we transacted more than 5 trillion Kenyan shillings. That's sort of almost to our country's GDP that was transacted last year, and which means that Kenyans transacted 14.27 billion shillings almost every single day last year. And of course, this has been accelerated by the government's efforts to reduce on cash handouts and cash payment to virtual payments. And of course, during the COVID-19, you find that a lot of Kenyans have been transacting through mobile money, whether it's sending money to our loved ones back at home, whether it's making payments, because we have been reducing a lot of cash payments due to COVID-19. But at the same time, also banks also jumped on to the mobile money payments. Now you
okay,
find that
Mercy,
some of the
let me just get this in, Mercy. Let me just get this in. So you talked about the penetration. Obviously, mobile money has transcended to the remote part, the rural part. Paint the picture for us. How are Kenyans, or how is the government handling the issue of infrastructure? Because if we look at the picture here in Nigeria, even when in rural parts, the individuals tend to use mobile money or e-transfer or e-payment, you have the issue of network, you have the issue of power, you have the issue, so how are Kenyans handling that part of the issue?
Now, one of the biggest players, telecom companies in Kenya, Safaricom, has coverage across the country. Now, you don't need to have internet for you to transact mobile money. We have the USSD code. Now, what happens when you buy a SIM card from Safaricom, which is our largest telecom company, it comes, when you insert the SIM card in your phone, it comes with the M-Pesa component. Now, M-Pesa is quite key in Kenya. You can't separate M-Pesa and Kenya. So once you have the M-Pesa component, you don't need transaction. From the most simple phone that you have, that my grandmother in the village uses, that doesn't have even internet, you can be able to have M-Pesa. So I can send money to her at home. She can buy groceries from her people there in the village and pay through M-Pesa. So the beauty is that you find that Safaricom has quite a huge coverage. And of course, we also have the government. We also have Telkom, which is partly government-owned, but Safaricom has the largest coverage of network. So as long as you're in a place that has network and you have a mobile phone, the most simplest that you can have, and it has a Safaricom SIM card, then you have M-Pesa and you can be able to transact from the remote part of the country.
All right, Mercy. Thank you so much. We obviously have a lot of grounds to cover, but we just have to leave it there for now. Thank you so much, Mercy Milanoy, for joining us and telling us, painting the picture of what's happening in Kenya when it comes to e-payments. With us, enjoy the rest of your day. So we'll take a break. When we come back now, more developments from the African continent. To stay with us. It's Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Now to Angola. ENI has started production at a new oil field capable of producing Kusa field, which was discovered by the exploration well in the March 2021. How will this impact the oil industry and the economy of Angola? We have Matt Kindiga, Associate Practice Leader at Sub-Saharan Africa Frontier View, joining us now to tell us what's going on in Angola. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the program.
Good to have you. Well, what does this new ENI oil field mean for the industry in Angola and the economy as a whole?
Certainly so. It is a positive development for Angola's oil industry. So there has been quite considerable difficulty that the oil sector has faced in Angola. So oil production has declined by close to 800,000 barrels a day since 2016. So certainly we have seen the sector in long-term decline. So this new announcement is quite positive. We are expecting this to result in a stabilization of oil production over the next few months or so. But the question is whether this really will result in new oil production from new wells arising. That's really crucial in order to turn around the oil industry. And at the moment, it's not clear whether we are going to see new investments into new oil production. So a positive development, but we do need to see more investment to really turn around the industry.
Yeah, so at this time when the price of oil is volatile globally and a lot of countries are actually talking of clean energy, how does this affect, this new exploration by Angola?
Certainly there is less interest in the oil industry in certain markets. So, Angola has a very high cost of production. When oil prices are very elevated, there was lots of investor interest into Angola. But obviously, with oil prices not quite as high as they were, so we're looking at oil prices of around about $60 to $70 a barrel. At the moment, this is well below the sort of $100 a barrel plus that we saw before 2014, 2015. So this certainly has an impact on the attractiveness of Angola. We think that the oil price needs to rise quite significantly further in order for there to be meaningful investment into oil production in Angola. And in our view, here at Frontier View, we don't expect oil prices to rise significantly for the next 6 months, 12 months. They could actually fall. So certainly some quite considerable challenges for new investment into Angola's oil industry.
Yeah, especially the threat from the Delta variant that is obviously bringing restrictions. But the government of Angola is also pursuing an economic reform program to diversify the economy away from oil, incidentally. How will businesses be affected by these reforms?
Yeah, certainly. So the country does remain very dependent on oil production for export revenues, for tax revenues, government fiscal receipts. And so the economy has been in recession for about 5 years, mainly because of its very heavy dependence on a weak performing oil industry. Now, the government is aware of this. It is aware of the need to reform the economy, and it is taking a three-pronged approach. So it's trying to reform the foreign exchange market. It has tried to stabilize the domestic banking sector, and it has also tried, it is also attempting to privatize state-owned enterprises. And it's making mixed success. So it has made considerable progress in easing access to foreign currency in the country. It has allowed the kwanza to depreciate, and it now is easier than it used to be to access dollars in the market. There's also been an improved stability in the banking sector, so the risk of a domestic financial crisis is a lot less. And we've also seen increasing credit growth in the market because of financial sector reforms. But in order to meaningfully reduce dependence on oil, we do need to see foreign direct investment into previously state-dominated industries. So that includes manufacturing and agriculture, for example. And Angola has made very little progress, partly because of domestic political reasons, but also because foreign investors are quite reluctant to commit to Angola, partly during this global economic environment, but also because the economy still remains so dependent on oil, and it has been performing very poorly over the last 5 years or so. So once we start to see an upswing in foreign direct investment into productive industries like agriculture and manufacturing, that's when businesses will start to see a meaningful difference in activity and opportunities in Angola.
All right. Thank you so much, Matt, for sharing your thoughts with us this afternoon, and enjoy the rest of your day.
Thank you.
So Egypt now, Egypt's non-oil exports have increased by 22%, and that's during the first 7 months of this year, totaling $17.7 billion compared to about $14.55 billion last year. That shows an increase of $3.148 billion. The increase in Egyptian exports came thanks to great efforts by the government to support oil production and export sectors during the COVID pandemic, which contributed to the continued preservation of the export market. Egyptian exports achieved a tangible increase in July by 4%, reaching $2.95 billion compared to $2.11 billion in July 2020. That's a raise of $74 million. Exports to Arab League total $5.35 billion compared to $5.49 billion during the same period last year. Exports to non-Arab nations reached $1.7 billion. That's compared to $799 million during last year. That's a raise of 26%. In South Africa, the government's finances will be boosted by a further 65 billion rand injection as the International Monetary Fund's special drawing rights become effective. And this is to help tackle the COVID-19 pandemic. The SDR is meant to boost global liquidity, and the allocation will benefit all members, address the long-term global need for reserves, build confidence and stability of the global economy. Last year, the IMF approved South Africa's request for emergency financial assistance of nearly 70 billion rand under the rapid financing instrument to meet the balance of payment needs stemming from the outbreak of the pandemic. And still in South Africa, Africa's biggest retailer, Shoprite, has announced that it would acquire Massmart wholesale and retail chains for 1.4 billion rand to bolster its leading position in the discount retail market. Shoprite says that the transaction is structured in a way that ensures that sustainability of jobs in the target businesses, with all applicable staff becoming group staff following the conclusion of the transaction. Massmart said it expects the transaction to become effective early next year once all the conditions, which include regulatory and competition approvals, become unconditional. Well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.